What are your trading problems? That's the question which I had asked in a video which I did. Like, look, if you have any trading problems, you can leave it. And many of you responded to that video with your trading problem. So in this video, I'm going to go through these questions and offer you some sort of a indicative solutions or solutions which you can try out, not every case, because I do not know what setups you're trading. Many times the answer to what are your trading problems is very specific to the setup which you are trading. When I do this on the member side, I know what setups they are trading. They're trading a specific kind of a setup, and then the answers are in the context of that. So keep that in mind. But let's look at some of the questions which you people have asked. So these are some of the questions which has been asked, and I'm going to go through those questions and look at offer possible solution. My biggest problem is often my winners turn into losses. The stock I pick often show good momentum at the beginning, but then the lose steam and end up hitting my stop. So this is a very common this problem about you enter a stock, it goes up for 2-3 days, and then it fails. Is a very common problem, which I also had in the beginning years. When I studied this particular problem, that is when I changed my methodology to look for 3 to 5 days moves and to take partial profit. So the solution to a problem like this, which is like when you are continuously is in the problem itself, which tells you something about the nature of the moves in the market. And this might be more so in a market condition, certain market conditions. So the solution to this problem is situational awareness. The solution to this problem is to take partial profit. The solution to this problem is to keep moving your stops and use trailing stops. So once you are in profit, you're trailing it so that you don't allow a profit to come down to your stop. This requires a different way of thinking about your setup also. So the solution to this problem might be also to rethink your setup. And that's how you can overcome this problem. So let's look at the second thing. Overtrading in the wrong market environment, not scaling down quick enough. Last year I got fully invested just when the market turned every time, not selling into strength, not changing my view on trade that is about to reverse, but instead continue with my original plan, which usually results in giving back all the profits. Now in this particular case also, if you look at this is basically there are a bunch of problems here, and those bunch of problems come in from bunch of skills which you need to develop. Overtrading in the wrong market environment, the solution to this problem is obviously very clear: developing a situational awareness. Now if you're a beginner trader, or if you don't have enough experience in the beginning years, you don't even understand that there is something called situational awareness, or situational awareness is critical. So once you develop situational awareness, you'll be trading the right kind of setups at the right environment. Not scaling down up quick enough. Last year I got fully invested just when the market turned every time. Again, this is happening because you don't have a situational awareness, you don't have a good understanding of market directions or market moves, when to be aggressive, when to be less aggressive. So I would highly recommend developing situational awareness skills. Not selling into strength. This is a problem which beginner traders typically have. Beginner traders are like, they dream about every stock they buy will go on to make big moves, and as a result they just want to keep holding. And as you talk to more experienced traders, almost every experienced trader, unless he's doing a trend following kind of a methodology, especially if he's a swing trader, will tell you that selling into strength is the solution to this problem. So you need to develop the ability to sell into strength. You know what is the problem, and that's like because you defined your problem well. So the solution to your problem is to sell into strength. You sell into strength 70-80% of your position, keep remaining position with a stop. That stop has to be break even or break even plus, and that is the way. In case the stock keeps going up, you're going to make money. Not changing my view on trade that is about to reverse, but instead continue with my original plan, visually giving results in giving back all profits. Again, this is a combination of situational awareness. If you come into a day and your view on a trade was certain way, and the market direction changes or the stock itself changes direction, your ability to change mindset is very important, and that is what is going to determine whether you're successful or not. And I think the solutions to your problems are in this way you define the problem itself. Now you have to go and execute those problems, because if you can do that, you will be highly profitable. So next thing is, I love your volume kind of trading 3 to 5 days, but I'm restricted to PDT rules by having a small account. It's tough. Yeah, this is a problem for small accounts. Typically, small accounts with 3 to 5 days trading can have a problem, especially if they are with brokers who don't allow them to reuse the capital. So this part of the solution might be to look for a different broker, and also sometimes, like if you have a small account, the only solution is to grow it and then not have this problem. So unfortunately, that's not something which much you can do about. I have a problem with stops. I plan to buy for the longer term without stop. Then as stock goes lower, I sell and take heavy losses. But for my swing trades, I always have a stop. However, my position trade losses are the biggest without a stop loss in place. So you know what is the problem. There are two problems according to me here. They're very clear-cut problems, right? One is, if you're going to be doing a position trading, you need to have very high skill for position trading. I see so many people doing position trading and they just don't have the skill for position trading, because if you are good at position trading, if you identified good stocks and timed them right, you should not have this problem. So I think the problem here is also that you are buying stocks which are going down. So is your position trading right? That is the thing which I would question, right? The other thing is that not using stops. There is no guarantee in this business. There are businesses which can be doing very well and they can go kaput in within minutes or within days, kind of a thing, right? So if you are not using stops just because they are position trade, the alternative is to have a very small size then. So your size itself becomes a stop, like the way mutual funds operate. Mutual funds will have 100 positions. Each of their position will be 1% of capital. In that case, if the position doesn't work out, it's like a stop loss of 1% only. But the flip side of that is then you're not going to make big money. But I think the bigger problem here, as I see in this particular case, is that you may not have the skills for position trading, because if this is always happening, then you don't have the skill for position trading, which is a harsh reality which you might want to look at and decide to change your views on that. And that's something which I've seen many times. People are like, they just think that it's long term, so later the losses run, and then losses run into big thing. The next question is, fear to upsize due to drawdown hit multiple times, mental fear even after months of consistency with small size. Whenever I have seen many times this problem where people trade with very small size, incrementally increase your size. You cannot increase size dramatically. If you're trading 1,000 shares, if you go to 3,000 shares in one day, you're going to feel the pressure. So incrementally increase the size. So if you're trading, say, 1,000 shares, go to 1,100 for a couple of days, see nothing happens, then you do 1,200, then you do 13. So gradual increase in size is the solution to this particular problem. I have just had about every problem in the past, but now it's been a matter of timing and getting entries. Feels like my whole watch list will break out on the same morning and I get stopped out of one and miss the rest. I'm looking at the right leading stocks, know my entries with alerts, but somehow get overwhelmed, usually at the open, and miss them all. I feel too slow. Thanks for the education. Typically, this is an indicator that you have too many stocks on your watch list. When you do your watch list, the next step is important in watch listing. A lot of people do watch listing, but the next step they don't do. And the next step is to prioritize by number 1, number 2, number 3, number 4, right? And when I do watch list, the next day morning, I come and look at my watch list and ruthlessly prioritize them as number 1, number 2, number 3, number 4. And then what I do is I enter the stocks in my trading interface, which is an interactive broker, and I enter them in the order in which they are important. So number 1, number 2, number 3, number 4. So in order to improve in this situation, I would say first is cut down your watch list. Okay, do pre-planning. I do a lot of pre-planning. What I do is, like an IB, I keep orders ready. I know I'm going to be buying. I buy 3,000 to 5,000 shares lot, so I keep my orders ready for those kind of lots. So pre-planning is going to be the key, but the most important, I think, is really prioritization of your watch list is going to be the solution. Always put the stop, but keep changing it in the hope it will recover. So my losses become bigger than winners. Kindly share. This is not a problem of psychology. Actually, this is like you don't have a setup which is working well, because if you find a setup which is good, typically good entries and good setup, your stop should not come into play most of the time. Yes, it will happen 20-30% of the time, but every time if this is happening, it's not your psychology which is the problem. I think it's what are your entry techniques and what is the setup which is a problem, I think. And in this business, is the easiest thing to say psychology is the problem, right? And I mean, if you talk to trader, everything is a psychology, or somebody will say 80% is a psychology problem. That's bullshit. Most of the time, problems are not psychology. Most of the time, the problems are process. The problems are in terms of entry technique. I would say that this is an entry technique problem, because if you're entering at the right time and right kind of setups, they should go up, right? And that's the kill. That exactly is the age which you need to develop. So I would revisit the setup rather than just saying psychology is a problem. This letting big size winner come down on me by being dogmatic about my profit targets. This is again like something which is a easier solution to this problem. The easier solution to this problem is to sell in peeling, which is a methodology which is used by many successful traders. And one of the things which you'll realize when you are in this business for many years and you study successful traders is they all arrive at the same solutions through trial and error. And the solution which people have found to this problem is to take profits at regular interval and then small portion of it let it work. And the other thing is, if you're dogmatic about your profit targets, that's also, I think, a setup problem, because very few things in the business of trading are so dogmatic that if I buy a stock at 80 and because every trade should work 20%, it should go to 100. Doesn't happen that way. Doesn't happen. Some of them are going to go to 95. Some of them are going to go to 120. So do a deep dive to understand this dogmatism, because is the market really like that? The market is not. The market is uncertain place, right? So the dogmatic solution to being extremely dogmatic is to change your belief system. And to change your belief system, you need to see new information. Questioning a hypothesis changes beliefs, and for that you need to do a deep dive. I'm still struggling to narrow down the stock for breakout setups. There are too many reviews each night to find good one to swing, as I'm still working full time. Now, the solution to your problem is in the question which you written. Like if you're finding too many things, then you need to add filters to reduce the number of things which are coming in. If you are going to be a next day kind of a trader, then you might want to only look at like highly liquid stock, right? You can add a filter which will reduce your universe then by adding a liquidity condition which says dollar volume should be above 100 million. Then you'll find very less number of opportunities. Or if you are one of those person who wants to trade high price stocks like I do, then you put a filter of high price stocks. I want to only look at stocks which are trading above $100. Then it is going to reduce your work. So there are solutions to your problem which are in terms of adding filters. If you're getting in any methods, if you're getting too many setups, the simplest solution is to add filter. And when you add a filter, add the filter which is most important filter, like depending on your situation. If you're going to be entering next day, I would say liquidity is important, because you want to be, or if you can't go into small cap kind of stocks where they're going to gap up next day. So those kind of filters will help you overcome this problem. So in this case, selling too early to lock in profit, which makes my winner really small, and also issues in timing entry for my deep trades, because sometimes I wait for the price to go deep enough into support zone for better risk reward, but then it bounces up real quick and I don't want to chase it. As a result, I miss opportunities during the day. I think this is a problem which has to do with setups, because you don't have a clearly defined setups. You're fluid. If you have very clear setups, then this problem will not be a problem, basically, because if you're taking too early also, it's a question of what setup you're trading, right? And if you're a scalper, it makes sense to take your profit quickly. If you're going to be looking at a momentum burst kind of a trade intraday, then it's going to go up for 3 to 5 candles, which might be 15 to 20 minutes. So I think setup is the problem in this particular question. Same way, your pullback thing is not a well-defined setup, and because you don't have a well-defined setup, you're not entering based on a setup, you're entering based on your feel. So I would say go back and rewrite or rethink your setup and rework your setup, because if you have a clearer setup, many of this conflict will not be a problem. My problem is fighting the trend. I short a run up and get squeezed and buy something down horribly. Recently I bought Hood at 18 point, thinking downside is over lowest from IPO level. Then came the earnings day, cut my losses at the bottom during pre-market, only to see Hood go high 40% up from the low level a few days later. Clearly, you have a setup problem. You don't have a defined setup. You're thinking in stocks. You're thinking Hood is going to do this. That's like not a setup. Setup is a setup condition a stock should satisfy to be considered for either buying or shorting. So is there a setup on Hood where you want to short? And it might be Hood or any other stock. So when you start thinking in setup terms and not stocks term, these problems will go away. I see clearly a problem of like you're thinking in individual stock terms, not in setup terms, because setups have clear definition, they are clear checklist as to that condition has to be satisfied, then only you consider that stock for entry. So if you don't have setups, you're going to react to random noise or stocks or your feeling, and that is not a very successful formula. So this is the next one is how quickly to put stop loss and break even, how to manage the trade properly. The stock often hit the low of the day in the first 15 minutes and then resume advancing. Exit on ATCP setups on high price and price stocks if setup doesn't work. Sitting with swing which not work properly in the first 1 hour. So how do you put again, in order to move your stop to break even, the most critical thing is the entry and quality of setups. If the entry and quality of setup is right, then the stock just takes off. And if the stock just takes off, then you can move your stop to break even. If the stock doesn't take off because you've selected a poor entry or you selected a poor setup, it's not going to work, right? And if you see that again and again that you put in a stop and then the low happens, the answer is simply to increase your stop loss, right? To account for that fact. So you might start with a wider stop, decrease the size of trade which you're taking to compensate for that wider stop, and then move the stop later once the low has been established. Exit on ATCP setup. I'm not sure what ATCP stands for. High priced and price stocks if setup doesn't work. That's again like you should have some sort of a criteria as to you enter a setup and within how many minutes or how many hours the setup should work in your favor. If it is not working, then because there is so many setups available, you can deploy your capital in something else. Then even if the stock has not actually hit your stop, you can get out of it, especially if you're a swing trader. This is different for position trader. Position trader have to make sure that what they select itself is so sure they are about that they don't have to change their mind. While you're swing trading, the whole idea is that I want to put my money into a swing trade which is going to work immediately because I did a damn good job of selecting the right setup and also selecting a right entry, and that's when it works. Switching with swings which not work properly in first 1 hour, again same problem, which you can have some sort of a criteria where if it doesn't work so much in 1 hour, then you get out of it. Overtrading, using too much capital daily, not sizing down in current environment, and many more. I'm a pro in hindsight and lacking conviction from trading too many varying stock market caps, setups, and time frames. So you know what is the problem. The problem is, if you can define the problem, it is always easy to find a solution. In this particular case, the problem is very clearly you're doing too many things and you don't have situational awareness. So I would create situational awareness daily. I would have a situational awareness, written down situational awareness daily at the beginning of the day. Operate based on situational awareness. Use visualization technique to train your mind, and then reduce the number of things which you are doing, which is the solution to your problem basically, right? And sometimes taking a break from trading and thinking these issues and then coming back after 2 days helps in this kind of cases. I enjoy averaging in and averaging out trades, always following good RR setup. The problem is usually my size does not get big enough to get large percentage win returns. I do enjoy not having to be in the front of screen all day. That is what. Yeah, means at the end of the day in this business, size matters. Okay, means once you are successful in trading a setup, it's the size, right? And if you can size up, so work on your size, gradually increase size, and that is the solution to your problem. Is you look at any profitable trader and they are doing size. Okay, they are doing size. They may not say it publicly, but they are doing size. Okay, they are putting in a lot more capital. They are like taking out capital. They are like doing peeling of positions or selling into strength. So size, gradually increase size. That's the solution. When the environment is right, I trade well. I had a very profitable run October, November, December. My main problem is nailing down exactly why that period was profitable for me. The indexes and MM both help, but don't tell me the whole story. The MMTS seems to be fairly correlated to that period, and also the fact that there were lots of setup in my scan. I guess I just want something more concrete, but I don't know what exists. Also, like a lot of people, I overtrade, giving back some of my gains. I think it can solve problem one. I already have the discipline to solve problem two. You need to define go time a little bit better for myself. So again, like this is a skill which comes down to situational awareness. In the beginning years, I was not very good at it. Now that I work on it every day and been doing it every day, you become good at it. So the solution is to understand the market periods, because the market periods were very good, October, November, December 2021, because buying was coming into the market, and that's why. And then selling came into the market. So you're not, whenever you're dealing with market, okay, you're never going to find an exact, means people are looking for exact answers, right? And people are looking for perfectly back tested system, okay. They don't exist, okay. Even those people who use back testing and those who use mechanical method, I know many of them, and they are constantly tweaking their system. Some of them tweaking their system weekly, some of them daily. So mentally itself, you need to come out of this mentality that you're going to have a perfect solution to your problem. This business of trading is imperfect. You have to live with certain amount of uncertainty. The most important skill is to develop a mindset and visualize yourself to always be in control, controlled risk taking, thinking 3 days ahead. These are all the skills which allow you to do some of this. And also looking at your scans. Your scans, I assume based on what you're saying, MM and all, you're trading same method as I am trading, which is the momentum burst kind of a thing. When you run a momentum burst scans, the scan itself speaks to you, because you get more bullish setups, money is coming in. You said, see, when you like run a bearish momentum burst setup and you see more of them, then money is going out. Also looking at the individual setup within those two scans, when you look at it, when you see a lot of stocks near the top are breaking down, if you're saying like in a lot of like in a strong structure shorts, that is a sign which you need to take into consideration into your trading. Okay, what is happening? So you have to constantly think. It's not only about trading, right? And it means like you're putting in a trade, your trade is an independent decision, but you're trying to use the information from your scans to figure out what is happening in the marketplace, right? Which is same as what we do in an environment. If I go out today, it's very cold, there's ice on the road, so I'm going to be more careful. Same way, when you see the environment, when you run your scans, you're going to see that. Again, you will see that if the market monitor becomes more choppy, like you get 300 days sell buying, you get immediate selling, that is also an indicator. So I think you should be able to fine tune your situational awareness, and if you nail it down, the fact that you have very profitable setup is a good thing. Now you just need to work on the situational awareness envelope on top of that, and it should be a problem, right? Overtrade, again, this is a function of like a really situational awareness, doing a visualization, really controlling your risk, and also having a tighter definition of setups, basically. Now in this kind of a question where often when I enter the market index or forex, it stops moving or reverses pretty fast. Another problem is the winners too often turn into losers. Can you help? The first problem is clearly you have a problem about setups. Okay, because you're not really buying a right kind of a setup. Because if they are moving or reversing when you buy, you're not buying at the right time. So what is your setup? I don't know what setup you're trading, so I don't know. But I would question the setup which you're trading, because you don't have a setup. If you're going to be trading indexes, typically indexes are mean reverting. What it means is that indexes are best part when there is a weakness, and when they are extremely bullish is when they can be sold. So I think there is a problem of setup here. Clearly, reading this question, I know there is a problem. Another problem is that winners too often turn into losers. And solution to this, I have said multiple times since morning. Solution to this is sell into strength. Peel off your position, move your stops, right? I hear many times in the trading world people giving advice: just sit on your position, don't pay attention, don't put stops. I don't know where these people come from. Okay, I really don't know where these people come from. That's not how you become good at trading. You need to manage your positions. Okay, unless you're a position trader, then it makes sense, that advice. But in the context of being a swing trader, I don't really think that advice works. I have not seen many of the people who are very successful in this business following that advice. So if your winners are turning into losers, that means you don't have the whole skill of selling into strength and peeling your position. So if you can do that, it should not be a problem. And the fact that you can find winners is good, right? The only thing which you need to fix then is selling into strength. I'm able to find good stocks and promote market environment, but my stocks start moving after my patience is exhausted. It will go to sky only after I pre-book my stop loss. Clearly, and this is a very common problem I see, because people fall in love with stocks. They're not thinking setups. In order for a stock to be considered for a buy, there has to be a setup on that stock. And this is something which means like, it has to reach a setup condition it has to fulfill for me to consider it for buying. Like say, I buy an anticipation setup. I don't care what stock I'm buying that anticipation setup on, but I want to buy an anticipation setup where it had 3 tight days, and there is a definition of those 3 tight days. The 3 tight days should be less than 1%, preferably less than 0.40%. So then that's an setup, right? If those set of conditions are available, it is not an extended stock, then I'm going to buy it, right? So if you can identify good stocks, you are saying that you can find good stocks, but your problem is you're entering them too early. Then develop a setup for entry, and that should help, because this is a clear, like, basically there's no you don't have the setup to enter, basically, because you are selecting the right stock. They go to sky after you, so you're not entering properly. So work on entry techniques. I'm new to this field. I love your knowledge sharing video. I have a problem with entry, and most of my trades hit stop loss. I'm frustrated. What setup are you trading? Because you need to have a setup which has got higher probability. Just entering any random stock, you're going to have stop loss hit again and again and again. You need to have a setup. Okay, that's one. Second, even if you have a setup, and if you don't have a situational awareness, like a lot of people are trading in this market very aggressively, this market breakouts are not working. So if you don't have situational awareness, you're going to be hit with stop loss after stop loss. So 2 skills: having a right setup and developing situational awareness. Size: I use too much size when not necessary. In good times, my aggression leads to astonishing result, but no movements, I'm pissing out money, which leads to inconsistent result. Now that this itself, there is a solution in this, which is to only do size when the situation is right. So what is the solution to this? And so many times I'm saying the same thing, but solution to this is situational awareness. Developing situational awareness. According to me, the most important skill in this business is situational awareness. Very few books or any book I have seen on trading, or most of the traders, don't emphasize situational awareness. If you can develop situational awareness skill, that is the ability to read when to be aggressive and when to be super cautious, then this problem will go away. And there are tools to develop that. Like I use Market Monitor, Market Breadth to do that, but there can be many other ways of doing this. So situational awareness is a higher order skill. It is a filter which you need to put on top of your setups, then that filter is going to determine whether you're going to take certain kind of setups. Like if you are trying to short in a bullish market, it's not going to work, right? So same way, you're going to be very aggressive in a market where breakouts are not working or things are not working. You're not going to be. So develop situational awareness. Consciously develop situational awareness. Write it down. Create situational awareness. Compare it to other people's situational awareness. If you know somebody else who is also trading similar things, and then that should help you, because I had this exact problem where I used to take the account up, lose money, take it up, lose money. Then I started thinking about it. I developed situational awareness. I every day morning develop my situational awareness. That guides my trading, and that problem has become less of a problem. Yeah, problem well defined. Yes, if you can define a problem, like a lot of time people approach me saying, "Oh, I want your help," and I say, "What is the problem?" Everything is a problem. Yes. Everything is not a problem, right? Your problem, is it a setup problem? Is it an entry problem? Is it an exit problem? Is it a size problem? Is it a trader problem? Is it your lifestyle which is a problem? You can't get up early in the morning and you're entering trade late. So define problem, you'll find solution. I need to work on market timing. That's the skill. If you are going to become a trader, timing is everything, right? Timing is extremely critical if you want to become a trader. You cannot escape that. Adjusting size accordingly, which is situational management, as I'm a longer term swing trader. I was wondering if you have a particular method you apply to ensure portfolio risk management on a day-to-day or weekly basis to avoid longer drawdowns. I am always conscious. Like in this market condition, I'm not taking trades most of the days overnight. Why? Because the risk is very high, right? In a different market conditions, if the market post, like I say, the COVID bottom was, I had like more than 150, 170% of my account. So what determines that? Situational awareness. So the solution is to develop situational awareness, even if you are going to be holding for a longer term period. So essentially, situational awareness, sometimes modifying the setup which you are trading is important also, because many times, like in the beginning of a bull market, certain kind of setups work, like longer term holding setups work. But let's say, assume that, look, the market spends entire year doing what it has been doing since January, then your setup is not right for the market environment, right? So either sit out or develop alternative setups which you can trade during these time frames. That's the solution. FOMO, avoiding volatility, setting the stop. FOMO is typically people who have FOMO, they don't have a setup, according to me. People who don't have a setup, they say, look, I have FOMO. If you have a setup and if you have specific guidelines for my breakout setup, I have a very specific guideline, which is find and enter early. So I'm trying to enter my trade in the first 10 minutes from the open, right? So then FOMO doesn't come in. FOMO comes in when you don't have a defined setup. Volatility is also a function of, like, you're not reading the environment. Not every time the environment is very volatile. Currently it is extremely volatile. But when the market is going up, typically there is a very low volatility environment, right? So situational awareness, setting the stop. Again, if you don't have a setup, then your stop strategy is not working because you don't have a setup, right? Setup stops cannot be thought of independent of a setup. Stop is one subsystem of a setup. Many times people come to me saying, "Oh, my problem is stops." And when you dig deeper, you find that their problem is not stop. They're not entering at a proper time. If you don't enter at a proper time, no stop strategy is going to work if you don't enter at the right time. If you're not entering the right stock, no stop strategy is going to work. They're entering very extended stocks or shorting stocks which are extended to the downside. It's not going to work. Or they're buying things on a third day of a swing. It's not going to work. Your stop is not a problem. Your basic problem of setup there. So I'm good at finding and entering setups early when whether it be bottom, momentum breakout, or anticipation. But once I'm in profit, I often give too much back as I sell into weakness. So you know what is the solution? The solution is to sell into strength, right? Selling into strength is a learned behavior amongst traders who survive this market. When traders survive for many years and they are profitable, then they look back and say, look, in this particular trade, I was up 20%. and I let it come to break even, or I let it come and hit my stop, then they rethink what they are doing, because with the same number of trades, you can make more money. In your case, with the same number of trades, you'll be able to make more money if you can sell into strength, right? So the solution is to sell into strength. And once you start developing selling into strength as a skill, it might take you 3 weeks, 6 weeks, 1 month, 2 months to become good at it. But once you overcome that problem, your problem is not finding good stocks, your problem is not entering early. So the next level problem which you need to solve is selling into strength. If you are using moving averages to trail your stop, I would suggest that rethink that, because moving averages are lagging indicators. In order to sell into strength, moving averages are good if you're going to be doing a trend trading, if you're going to be a trend follower. So that's another problem which I would say is to think through. I tie too much of my self-worth as a trader toward my performance. Any down days shoots my confidence and makes me question my progress, while gains either make me feel on top of the world or just feel like breaking the losses. How can I just see gains and losses as data point and accept that as part of process? Caught up in individual trades. So, means this is again a learned behavior. As a trader, when you survive and prosper for many years in this business, then you realize good days means, in fact, and I have a rule. There is a member in Stockbee who also has a rule which is like, and when you feel like you are the gods of trading, or you're God's gift to the trading world, is when you should actually reduce your size and scale back your trading, because that's when you are going to likely to make big losses, right? So these are problems which are more related to visualization. I think try visualization and try and work on these problems as to how you're like basically reacting to positive phases. Means, in fact, and whenever I have like a lot of profit, I sometimes don't trade next day, for the simple reason that is when you are super confident and you end up making mistakes, because you feel that you are God's gift to trading, or you are like a superman of trading, and then the market has a good tendency to whack you back. Similarly, don't get too depressed. There is always a next trade, right? There is always a next trade. My problem: entries in C setups, staying too long in extended position, treating leverage as a must, and staying invested all the time. So your problems, if you can define this problem, your solution also, right? Entering in C setups. Why are you entering C setups? Only enter A setups, right? If you enter only A setups, the problem is gone. Staying too long in extended position, again and again. Invariably, this is a problem which traders don't think through. That selling into strength is a solution to not giving up your profit. It takes years for people to realize that. Once the realization comes in, they quickly implement. So many traders who come to my site and become members, right? And they have this problem, and then they see all these people who have learned to do sell into strength, because there are a bunch of other traders trading on my site, and then they quickly learn, and they come back to me after 15 days, 20 days, saying, hey, I became highly profitable once I joined your site. Did I do anything? I didn't do anything. Only they realize that selling into strength and finding and entering early, these two things, and consistently I get a feedback from members who join that once they figured out selling into strength as a technique and figured out how to sell into strength, their profitability improved so much, and they're keeping more of their profit. So this is a learned skill, and once you learn and realize that this is a solution to your problem, and you spend time, couple of weeks perfecting it, deciding whether I'm going to sell 60%, 70%, 80%, keeping 20%, 10%, and on that 10%, where to keep the stop, you'll find that your problem will be over. Treating leverage as a must. Sometimes this is a personality issue, right? And some people have a personality issue, right? And I recently saw a case of a trader who said like, he is like having problem. And I looked at his trading. He's all or nothing trader, right? He's putting 100%, not 100%, like all the margin into one trading idea. He just cannot control, like, and he is either I'm going to take a big trade or not going to take a big trade. As a result, the outcome is very clear, right? The outcome is like vast swings in profitability. and losses. So you have to take a break from trading for 1 or 2 days. Think through this leverage need and your personality profile. Maybe the solution might be to take out profits from your account once you make profit, which is a solution which I told to a lot of these people who have this leverage problem, because their problem is they're going to blow up one day, right? So to take out profit periodically, so that you reset your account to a level and again try and do it, and which is also one of the solutions. You have to try solutions. There is no, if you have a predominant personality of gambler and taking big position in the hope that you will make a big money in the market, then you have to work on it or live with it. Stop loss. Whenever somebody says their problem is stop loss, I know their problem is not stop loss. Their problem is setup. Their setups have stop loss as subsystem. If your problem is stop loss, you have a setup problem because something is not working in your setup. If your setup is not working, you need to fix setups. Then stop loss will not be a problem. There are no solutions which are just unique stop loss solutions. I keep getting chopped up. I keep the stop loss at the low of the day for breakouts. I choose highly volatile stock with high ADR, and they may anytime fade the day. I buy them and again break out tomorrow after stopping me out. The earnings season, 2 episodic pivot hit my stop and then went up 50%. I had invested 50-20%. So even if I am getting into fast moving, I'm not making money due to many stop losses hitting. Now, there are many problems in this thinking. Okay, whenever you're going to be trading a high ADR stock, okay, you cannot put a stop at low of the day and expect it to work. If you're going to be trading a stock which has a high ADR of 10 to 20%, the reason you are trading those stocks is because you want to make big money. Your stop loss has to take into account the volatility of that stock. Low of the day as a stop loss which I use, or very tight stop which I use, I'm not trading high ADR stock. I'm trading very low ADR, high price stocks. So that's the problem here. If you are going to be trading high ADR, small cap kind of stocks, there is no way you can get away without putting stop loss of 20%, 25% on those kind of stocks, because they have extremely high volatility. That is why they have high ADR. And that is why they are going to go up, they go down, then go up, because they have higher volatility. So in order to trade those stocks, you need to have wider stop. So think about this, because you are trading high ADR stocks. They are going to fade because that's the nature of those stocks. Do a deep dive on stocks with high ADR. They are highly volatile intraday because buyers come in. See, many high ADR stocks are not necessarily driven by institutional money. They are driven by retail money. Retail money comes in bunch, right? If a stock is going up, the first set of people will buy, and then there are so many trading rooms and Discord groups and Twitters and all. So they'll say, oh, this stock is going up. Second set of people, third set of people. But then after that, there are no people to buy. So the stock drops intraday. Then again, somebody says, oh, this is a good pullback setup. He buys, then bunch of followers buy. So you have to understand the market dynamics behind how small these high ADR stock trade and why do they trade that way. If you understand that, then you might understand that these stocks need more active management, or it might be better to day trade these stocks. So those are many solutions. You open a Pandora's box. If you're going to trade high ADR stock, there is no way you can trade them unless you go into an intraday time frame with a tight stop. Okay. Second is like you're allowing stocks to come back and hit again. Selling into strength is the solution. In the earnings season, 2 episodic pivot hit my stop and then went up 50 to 100%. So if that has happened, reduce your position size, increase the size of your stop. Increase the size of your stop. Like that is the solution. So if you have the ability to get into fast moving names, I'm not making money due to my stop losses because you don't understand the nature of these stocks. These fast moving stocks need wider stop. If you are going to be trading high ADR stock, especially one which are priced below $10, take it from me, you're not going to get anywhere by putting 2.5 or 3 or 4% or 5% stop, especially if you are a multi-day swing trader. Intraday, if you're trading, even intraday day trading, this high ADR stock, you cannot get away by 2.5 or 3% or 4% stop. You need 10% stop. You need 15% stop. You need 20% stop. Anything which is going to give you a higher amount of money and which has higher amount of ADR corresponding to the money which it is going to give you, you have to be willing to take a higher risk. So stops has to be wider. And that's the understanding which you need to develop. Mind clarity about what you're trading, right? Using a fixed stop can result in a loss, but a trailing stop can also stop out before continuing what could have been a profitable trade. I don't know how to allow trades to become as profitable as they could be. You're never going to find a perfect solution for stops. Okay, you have to live with it. And people have found acceptable solution to this method, and which is selling into strength, pilling positions, selling 20%, 50%, 75%, keeping remaining. Now, you are one of those person who may not be happy with that solution, but that's a working solution which many traders have made it work. So if you can change your expectation about finding a perfect stop, then there are solutions to your problem. I think my problem is market timing. The market, you're not the only one with market timing. That is a big problem for many people, right? Market changes are what are making difficult for me. Last year, big caps were doing well. In 2020, all the market was going up after March lows. So far this year, since shorts are working well and very few stocks are not correlated with the down move of the market. Since the market is factor that's making problem for me at the moment. I have seen you market monitor rule and read your blogs on how to interpret the breadth. But any additional info on subject would be game changer for me. I'm a swing trader, both run short like I told you. So the solution is situational awareness. Go back and see a video which I did where every day morning I do a situational awareness, and in that video, which is actually a clip from the morning meeting which I have every day at 8:30, I come out with my situational awareness and then decide what am I going to do. So develop a situational awareness. My situational awareness is not developed only from market monitor. My situational awareness is developed using market monitor. My situational awareness is developed using the stocks which are showing up in my scan and what kind of stocks. My situational awareness is developed by every day studying stocks which are up 20% plus in a week, or down $20 or up $20 in a week. So these things tell me what is happening in the market, what is working, what is not working. So it's a multi-dimensional model which I use for situational awareness. It's not just one thing. Market breadth is one thing, but it's also the trades which I am taking. Are they working, not working? Okay, the number of setups which are showing up in my scan, what quality of the setups are showing up, and what is happening to them 2-3 days down the line, are all the factors which I take into. It's a slightly situational awareness is a slightly evolved or higher order skill. Takes time. You have to commit yourself to using situational awareness for 3-6 months, and then you will become better at it. But the realization which you have that your problem is market timing or understanding the market is the seeds of your thinking is right in terms of you need to develop a situational awareness in order to overcome that problem. I have many problems, but I think my biggest problem is buying too many stocks at one time and allocating too little money to each stock. So means you have a problem with setup, you have a problem with prioritization. So I would relook at everything which you are doing. I would stop doing whatever I am doing, take a break from trading for 1 week, think through these problems, and then come out with solution. Because if you have too many problems, there are too many things wrong in everything which you are doing. Okay. I would like to have 10 position each consisting of 10% of capital. The problem is I have, after so many years of doing the same mistakes. I think another problem is to stop trading, then take a break of few weeks and then come back with a fresh perspective. During that 2 weeks, you don't even worry about the market, because a lot of time, if you're stuck in a certain way of doing things, unless you break the sequence of thinking and break the sequence of doing it, you're just going to go and Monday do the same thing again. Okay. I find it very difficult to set a pivot point, and when I do, I always hesitate to execute it, missing the entry. This is a classic problem of not having a setup. You don't know what you're doing. You don't know what pivot point to set, so you don't have a defined setup, right? And that's the thing. And not having setup is a big problem in this industry, not having a setup or clearly defined setup. So I would say start with defining a setup, because if you don't know where to set a pivot point, that means you don't have a setup, right? My main problem, especially during current market environment, is overtrading. Breakouts are not working, but it's really tough to sit and not trade them. Situational awareness. Again, the solution is to develop situational awareness. When I see a whole sector move and I have 4-5 names in the same sector setting up, my main problem is stock selection. As my understanding, the stock that move in a more linear way should be preferred. I also think maybe some more fundamental info can help. What would you suggest? Many thanks for these videos. Yeah, sectors, if you're going to select, like, can I select the one which has the best revenue growth? If you want to select amongst the stocks in a sector, the one which has a revenue growth about 39%, or which back to back 2 quarters of 39%, is likely to make a bigger move than any other stock in that sector, unless it's a speculative sector. So select a filter which might reduce your number of stocks which you're looking at, or don't buy stocks which don't have a revenue growth or a sales growth at all, and that might be the solution to this problem. So I looked at all these problems which people have said, what are your trading problems? Typically trading problems, one of the biggest problem which you will see is not having a setup or clearly defined setup. Okay. Second is people get into the right stock, but those stocks turn on them, and that is because they can't sell into strength and they don't use trailing stop. Third is really over trading, not having the right kind of a framework for selecting stocks in terms of prioritizing. So if you can work on these problems, and if you can make one problem disappear by working on it for weeks, it takes weeks, months sometimes, to solve your trading problem. You have to be creative, you have to be innovative. You try something, it doesn't work, you try something, it doesn't work. Situational awareness, you don't have the skills. I didn't have the skill, I developed market monitor for it, right? I developed a framework for it. I have a set of questions which I ask. So work on it, and once you work on it, this is a continuous journey. Means you are going to find traders have found solutions to these problems. You are not the first person to encounter this problem, and you have to, sometimes you are not aware that there is a solution which is like sell into strength. Sometimes you are not aware that solution is situational awareness. Once you become aware, then you don't have the skills to do it. Then you have to build the skills. Once you build the skills and implement, you will see that slowly you keep chipping at your trading problem. You keep chipping at your trading problem. Your trading performance increases, your confidence increases, your mental issues go away, and you don't need a psychologist.